Howdy, folks. This is Andrew Bennett with InsuranceThatFits.com, where we fit the need and we fit the budget for your Medicare and health insurance needs. Today, we're going to have a very simple conversation. Actually, it won't be much of a conversation. There's not a lot of give and take here. It's just me. It's just me giving. That's all it is me giving. Anyway, discuss, I'm going to discuss how an insurance policy works. Not Medicare, but just a regular old insurance policy in the 64 and under crowd. And every policy works this way, whether it is, when you're looking at a mirror image of yourself, you turn one way and you think you're turning the other. Anyway, so every policy works this way, whether you get it from your company, from the marketplace, from, your cousin's left shoe, whatever. Every policy works this way. Every policy has three stages. I'm going to show you what that looks like. Let me share my screen here. Share. There we go, sharing the screen. Going to start off slideshow from the beginning. It's always best to start a slideshow from the beginning, I find. We've got that beautiful InsuranceThatFits.com logo. Okay, so first of all, your deductible. This is what I call the you pay stage. Okay, stage one, the deductible, you pay stage. Lots of people get really hung up on the deductible. There's two more stages though. There's you pay, then the co-insurance. The co-insurance is a percentage, can be 80-20, 70-30, 50-50. You pay the lower amount, the insurance company pays the larger amount, at least in every case I've ever seen. Okay. So that's what I call the you both pay stage because you and the insurance company are both paying a portion of the cost. Stage three is the out-of-pocket maximum, or what I call the they pay stage. Okay, so you can see a progression. You pay, then you both pay, then they pay. The progression there on who pays. Now, most policies also have copays. A copay is a set dollar amount, not a percentage. Coinsurance is a percentage. Copays are a set dollar amount for a given service or a given thing. Typically, doctor's office visits, prescriptions, those kind of things have copays. Now, copays skip the deductible. They skip the coinsurance, so they only apply towards the out-of-pocket maximum. Okay. So that's how it works. Every single policy out there. We're going to go through that little example here. So let's say you have a policy with a deductible of $3,500. We've got that right up here, $3,500. And you go get an X-ray, okay? They bill you for the X-ray $200, but guess what? The math isn't going to work off $200 because there's going to be a network discount because your insurance company already went to the hospital, the X-ray tech, everybody and said, hey, we represent a whole lot of people with insurance. If you want them coming into your office, you got to take our price. And they say, okay, we'll give you $115 off of that. So the amount payable is only $85. So if you're in your deductible phase, you get the pleasure of paying that $85. Sorry, it is what it is. Now your deductible is down to $3,415. Ugh. But you just keep paying and paying and paying on it. And eventually you'll get through the you pay stage, maybe. Hopefully you're healthy enough that you don't. And you go on to the second stage, which is your co-insurance. Co-insurance again is, in this example, is going to be 70-30. So we're going to take that same X-ray and now the insurance company is going to pay 70% of that X-ray. It's going to pay $59. And for the same exact X-ray that you paid $85 for previously, now you're only going to pay $25 for it. Okay, that's the co-insurance. That's the you both pay stage. They're paying 70%, you're paying 30% in this example. It can be different percentages. It just depends on what your policy says. So, okay, now we're going to go to the third stage. The third stage is your out-of-pocket maximum. We're going to say your out-of-pocket maximum here is $7,000. You go for that same X-ray, $200. Wait, no, it's 115. Wait, no, you didn't pay a thing this time because you reached your out-of-pocket maximum. That's the they pay stage. Okay. So every policy has those three stages. Deductible, you pay. Co-insurance, you both pay. Out-of-pocket maximum, they pay. Okay? Really simple. And just to keep in mind, those copays down there at the bottom, they only apply towards the out-of-pocket maximum. They do not apply towards the deductible or the co-insurance. And folks, that's how every policy out there works. Okay. You could have a policy, maybe it has a $0 deductible. Typically, the lower the policy, the lower the deductible, the lower the co-insurance is going to be. So you'll find on the marketplace some policies that have a $0 deductible. Typically, the co-insurance on those is only going to be 50-50. Now, I would much rather somebody be, let's say say we're looking at two policies and the out-of-pocket maximum is the same. Okay. Out-of-pocket maximum is the same. I'd rather somebody take a $0 deductible with 50-50 co-insurance than say even a $2,500 deductible that had 80-20 co-insurance. And why would that be? 80-20 is obviously way better than 50-50. Well, from dollar one, since your deductible is zero, you effectively skip that stage. And so now you're splitting every bill from the first bill with the insurance company 50-50. And if your out of pocket maximum is the same or essentially the same, I think that's a better deal, better way to go. You can't get caught up on any one stage. You've got to look at the whole picture. That's what I do for you. Give me a call, shoot me a text, send me an email, carrier pigeon, whatever it takes to get a hold of me. I'll help you out. I'll help you try to make a good decision with your health insurance and Medicare dollars. That's all, folks. I hope you learned a little something here. And if you need me, just call me. Thank you much. Bye bye.